All right, guys, ready to go. Good afternoon. Happy Sunday. Welcome back. Hope you guys are ready for a new week of market action, baby. Happy to be here with you guys. Excited to sort out price action here ahead of the new week. Share with you guys what I'm looking at across dollar, bonds, indices, and of course, take any of your guys' lovely questions at the end of the call. So with that in mind, guys, we'll get down into the business here. First things first, I do want us to touch on the economic calendar here. So if we go to Forex Factory, we do not have high impact news Monday through Wednesday. I still am expecting relatively decent price action, again, based off what we're seeing in the markets right now. Let me make sure I can hear myself, actually, before I keep going. All right, good to go. I'm still expecting relatively decent action Tuesday, Wednesday, even in the absence of high impact news. However, the cleanest, most easiest low resistance liquidity runs generally happen during high impact news. And again, one of the reasons for that is because think about what high impact news does for traders. It makes them want to speculate. It makes them want to come into the market, either change their opinion or have a new opinion. And then we utilize that as smart money traders, that there's more liquidity in the market for the taking. So these are days that generally present low resistance liquidity runs. And that's essentially why we're focused on these particular high impact news days or medium folder news days. So with that, let's go ahead and close out of that and we'll get into the business here. Let's go to the weekly chart. And we'll just go ahead and start with the US dollar. One thing I did want to mention before I do get started is absolute game changer for those in the community has been the action plan consultations, all for free. We are opening a few more spots for the remainder of the month. How long we're going to be doing this for free, I'm not sure. But I do want to make sure I let you guys know. Get in there, schedule your time, lock in a one-on-one call with myself. An example, a gentleman I was speaking to not even 2 weeks ago, in under 1 week, he was able to get funded. Now, while I understand funded is not the end goal, it is a step in the right direction. And you make steps in the right direction when you know what you're doing, why you're doing it, and there's a process to execute on every single day, right? When you're trading, when you're an aspiring trader, you should know what you're doing every day, why you're doing it, and it should become a routine. If you don't have a routine for journaling, for backtesting, for looking at the markets, for preparing for the markets, you're not bringing the level of professionalism needed to succeed in a business as difficult as trading, right? And my goal is to give you guys that clarity with the live streams that we're doing here, free one-on-one calls, and I will absolutely be getting back active on YouTube. And that's something I'm very much so looking forward to doing with you guys. So with that said, let's get into the business here. Amy, good afternoon to you, Silver Bullet Trader. Hello, hello, sir. Cleo, happy Sunday. Hope you guys are all doing fantastic. Eslam, welcome back. Happy to be here. Nikki, what's going on? Happy to have you. RJ, good afternoon. Lock and load. Yes, sir. Alistair, you have tweets to supplement the news. Right, there you go. With old Trump active on Twitter, it's like high impact news every day, right? And of course, with the geopolitical climate, everything going on worldwide, tons of factors that are going to inject volatility into the market. So very unprecedented trading times, again, based off everything we're seeing in the world right now. So it'll be interesting as always. Cleo, thanks so much for making the calls available for the community. Since the call, I've taken my first payout. Congratulations. Love to hear that. Really appreciate that, Cleo. Benson, hola. Happy to have you, brother. Kevin, welcome back. Happy Sunday to you, my man. Glad to have you. Joe, my man. Good to see you, brother. All right, guys, let's get into it. And I've said that a couple times now. I wanted to greet all the lovely folks in here, and we'll get down to the business now. So what I'm watching on the weekly chart, we've had a nice drop down into sell side here. I'm watching this weekly inversion fair value gap. Watch this going forward. That's going to give me directional clarity as to whether or not we're going to see a longer term reversal here, or whether or not we're going to see the market continue making lower lows. Another key level to watch as well, if you want to have a little bit more on your chart, you can have this gap here, extend that through, and treat that as an inversion gap if we remain below it. So a couple factors there. As of right now, though, I have been bullish the last 3 weeks on dollar, and we'll go into the daily chart and cover the key levels that allowed me to anticipate higher prices in the short term. Long term, I don't have that yet because, again, we just saw a huge long-term swing play out. And as I covered before, after I get a long-term swing into targets that I'm looking for, I generally become patient, right? Because, again, you want to keep in mind that these big swings in the market many times take time to develop, and it's not just one big swing after another, after another, after another. Sometimes we have to be patient, wait for more information, and let the market structure build, and these new swings take time to engineer. So that's what I'm watching right now. So it's been a lot more surgical strikes, just giving you guys a short-term bias. I do not have a bias that's thousands of pips away from market price currently. So when that becomes clear, you guys will be the first to know. All right, so refining this down to the daily time frame, you guys will recall the PD arrays that we were looking at the last couple of weeks. We had this down close candle here, which let me just label that on there. This is a bullish order block here. Because this down close candle traded into the bullish order block, you guys remember what I was covering when we were trading in here, that this should act as a what? A propulsion candle, right? Because it's going to take the place of institutional support here. Market drops down into it, the bodies stay in the upper half. That's what you want to see with all the PD arrays. And then we get an explosive move higher into that weekly fair value gap. So again, the weekly fair value gap was our draw on liquidity, right? That's what we were using as a target. Now that we've traded to it and through it, I want to see, can we stay in the upper half and use it as support? That's what I'm measuring right now. Again, the propulsion block, though, we hit it. Nice displacement higher. Market retraces. Look at the bodies perfectly stopping at 50% of that weekly inversion fair value gap, proving that it's not wanting to stay or to trade down into the lower half with a body closure. So what I'm watching is, does the market stay in the upper half? I like to see how the body was perfectly laid on the consequent encroachment, or 50%. And what I want to see going forward is, again, can we stay in the upper half? If so, then I will be looking for higher prices on dollar into the swing high here, and then you can split this wick here in half. That'll give you a target as well. And then if we accelerate through that, then we have the swing high back here. Working right down to the hourly. Let's go ahead and zoom into this here. What I'm watching is this hourly fair value gap here. This low here. I want to see this act as an intermediate term low. This low here already took out sell side. This low here already took out sell side here. So there's no need for the market to go below this low for market structure to remain bullish. This hourly fair value gap, you'll notice it formed in the upper half of that weekly inversion fair value gap. So if we are going to remain bullish, the market will have to show me inside this fair value gap, because I don't want to see this low taken out. If we take out this low, then my attention goes to sell side here. And then if we can't get back above that weekly gap, which is that yellow rectangle, then we could see the market, zoom out here. We could see the market really start to accelerate into these equal lows as well. But again, that's only a consideration if we lose this low here. If we stay above it and we find support inside this hourly gap, my attention is on this buy side here for higher prices. So let's go ahead and confirm that with the bond market. Let's go into the 10-year. The 10-year is usually the best one that I like to look at. You can look at the, as I've done before, you guys will notice I'll have all three up. I'll have the 30-year bonds, 10-year, and the 5-year. The 10-year is good enough for government work. So I'm just going to look at the 10-year here with you guys. So why did we see the last 2 weeks of down close expansion? So actually, I wasn't live last week, but I didn't need to be. You guys already knew the bias. We were bullish dollar, bearish bonds, and bullish on indices. Nothing changed in the previous week, so I wasn't able to go live, but nonetheless, the business was already sorted out. Why are we looking for lower prices on bonds? I'm going to go into a little bit of a deeper lesson here on market structure and how I use it to frame price swings. So we'll start with bonds, and then I'll share some things with the stock index futures. So looking at the weekly chart here, let me move this back here. We have a long-term high here. So whenever I'm looking for long swings or long-term price swings and I'm anticipating to materialize in price action, I want to see market structure that supports it. What does that mean? Well, here we have an intermediate term high. So in between two intermediate term highs, we're going to have a long-term high. When you start to see market structure nesting like this, we can start to anticipate protracted price swings when you have market structure setting up like that. So what I'm looking for here on the weekly chart, this up close candle, we traded up into it, we respected it, market broke down. We have this little wick here, market open, traded up, couldn't even get to 50%, signaling it's weak. My attention is on sell side here. I gave you that actually on the first month of May, and then we've just been accelerating down into that level for the past couple of weeks. I expect that to continue as long as nothing crazy happens. What was it? Moody's downgraded the U.S. debt, so it'll be interesting to see how that affects the gap open. So barring anything absolutely crazy, I'm still looking for lower prices on bonds, which also should support higher U.S. dollar. So sell side here is the draw. I want to see us accelerate through that, because if we're going to get down into these lows here, I want to see the market just really dive through this low, and that should give a pretty clean run into sell side liquidity here. What's going on with the camera? Camera just turned off. We're good. All right. All right, so working down into our daily chart now. Let's refine this even further. So on the daily chart now, we're refining it. We have a long-term high here. It's a long-term high here because we have an intermediate term high here. Whoops. Intermediate term high here. In between two intermediate term highs is a long-term high. So when you start framing market structure in the context of order flow and the draw on liquidity, price action becomes a lot easier to read, and it removes a lot of the mystery. So the market traded higher here. If you guys remember, when we were short-term bullish here, I was only bullish to this fair value gap here specifically. Reason being is because once we got there, I want to see how the market traded there. Hit it, broke down, created an imbalance, hit the imbalance, respected it, broke down, bearish breaker, extended through, hits that there as long as you remain below that breaker. Sell side here is in play, and sell side all the way down here. So you guys can see how, zooming out, you can see the market structure on the weekly. Whoops. And then now when we zoom into the daily, you can see the fractal of that here. Right now we're seeing bearish market structure looking for lower prices. One thing also throw in here is market structure is going to form at the PD rates that we're looking for. So if you know how to read institutional order flow at a high level, the progression of that is actually anticipating market structure. What does that mean? Well, if we're bearish on bonds and we're looking for lower prices and the market trades up into a premium market from high down to low, it's just trading up into a premium for accumulation inside that fair value gap to then, or sorry, distribution inside that fair value gap to then go lower. So you can actually start anticipating where intermediate term highs and lows are going to form if you understand where the draw is, which is bearish, and then you understand the PD arrays where the market's likely to turn at. So we can, as smart money, we actually predict market structure. So it's none of that higher high, lower low garbage that people just talk about after the fact. We're able to actually predict market structure, knowing what we're looking for and why. So again, as long as we remain below the breaker, looking for lower prices on bonds. Working down into the 4-hour chart now, for those of you guys that may be trading bonds, look at all the beautiful shorting opportunities that form here. Right? Fair value gap here, hits it. Imbalance here, hits it. Imbalance here, hits it. And then what do you notice with these respective fair value gaps here, whoops, here, and here? They're not filled in all the way, right? So the market's proving it's bearish. So it's not enough to know, okay, the market's bearish. You want to know how to read the market, right? You want to know how to read order flow and confirm that the market's telling you it's weak. And it's doing so by not repricing to the high of these inefficiencies. And then every time we run out buy stops like here, that creates a new intermediate term high for the market to then break down and continue accelerating lower. Same thing here, short-term high taken out, should create a new intermediate term swing for the market to continue its descent into sell side liquidity. So that's it on bonds. Let's go into NASDAQ here, moving right along. We'll go to the continuous chart here. All right, so let's take it from the monthly and we'll go into kind of why we've been seeing higher prices just as a quick refresher for you guys that have already been here. All right, so we have range low, range high on the monthly chart here. So again, macro perspective is going to come from your monthly, weekly, and daily charts. Market dropped down into a discount market here, took out these equal lows, and that's why I've been looking for higher prices as a result. This fair value gap here, again, was not a shorting opportunity because the market is bullish, right? It delivered from internal range liquidity, and now we're going to look for the external range liquidity here. So we're not looking at this fair value gap here as like a sell-off. So again, that's why it's very important to understand narrative, because this is not a breakdown shift in the market structure, fair value gap to go short 2022 model, right? Simply because the market is bullish, it's going to reach higher. All right, so working down into the daily, let me take that off here. And that should just be on the daily charts. All right, so weekly time frame here, we had the market drop down into a discount on the monthly chart, but now looking at the weekly even closer, there was a sell side liquidity pool here. From that sell side liquidity pool, we wanted to see how we traded there. We ended up seeing a strong rejection to the upside. So that made the first draw on liquidity this swing high here. Above that swing high, we had the weekly fair value gap, which now was repriced into perfectly. And then I want to see how we trade there. If we can trade to and through that weekly fair value gap, then that would be bullish. And then I would look for all-time highs as long as we show strength through this weekly fair value gap. For long-term swing trading, position trading, this would not be a high probability entry, right? Because looking at it from a smart money perspective, right? If we're looking to trade here and the price run started here, so I'll drop down to the daily now. This is now a really expensive premium market, right? So if you're looking to swing trade or position trade using monthly, weekly, daily, you still want to get good discount pricing, right? Which would be below equilibrium here. So above here, in my opinion, for swing trading, that wouldn't be as good of an entry for me because personally, I'd be looking to get positioned here in the lower end of that price run. However, for intraday traders, the bias is perfect because as long as we're looking for higher prices, framing the bias in a bullish narrative, it makes it a lot easier for us to know what we're looking for and frame higher quality setups. So again, the focus for me is still going to be on buy models. I'm avoiding calling a top in the market. It's not something I'm in the habit of doing. Let the market trade to the targets we're looking for, and from there, it's simply going to reveal its hand. So We've traded up into that weekly fair value gap now, and the reason I'm emphasizing to you it's not a good new place to start a swing position or a position trade is because this weekly fair value gap, it's now in a premium. So if you accumulate it down here, this should be profit taking for you now. So we wouldn't want to start going long when profit taking is what we should actually be doing from the discount run that we predicted here. So breakaway gap, again, holding true. You guys can see how when you see these signatures in price action, breakaway gaps, imbalances unable to get filled, look at what an electric price run we've seen to the upside. So these are why you want to start learning to identify these specific signatures, because it's not going to be anymore, wow, where'd that explosive price run come from? You're going to be able to predict, anticipate where and why it's likely to trade there. Admittedly, though, I do want to be fully transparent with you guys. Even though the bias has been 100% bullish, 100% dead on, the AM sessions have not been easy to sort out price action, right? So how am I dealing with that? I'm trading my lowest size. I have not been trading over one mini contract. I'm not in there trading with 2, 3, 4 minis. I'm not gunslinging because I'm waiting for cleaner market conditions. And on the higher time frame, it is relatively clean, pretty easy to see. But then when we zoom into the intraday price delivery, it has been significantly more difficult, at least for my style of trading. So the way I handle that, the way I manage it, is I reduce my risk because I want to be able to have my powder dry for easier, cleaner trading days, which are absolutely going to come. And when they do come, I'm going to size up, capitalize on it, but you have to be able to stay in the game. And staying in the game means not blowing accounts, not going into deep drawdown that takes you weeks and months to come back from, right? And those are things that I'm doing to prevent that in my trading. So weekly gap, we traded up into that. A lot of inefficiencies being left open. Every inefficiency is actually supporting price as well, right? So we see fair value gap or volume imbalance and liquidity void here supporting price. Fair value gap here supporting price. Fair value gap here supporting price. So everything is clearly pointing bullish. And then we see the same thing here with this gap traded down into it being used as support. So these equal highs here look like an obvious draw here for me. There's going to be a lot of fund level buy side here for the market to want to accelerate and ramp up into. Other thing I want to touch on here, if this is where the price run is starting, this is where we think it's going. We want to see quick repricing up into these highs for the profit release portion of the price run here. All right, working down into the hourly chart. Let's go zoom in here to the market structure. And like I said, I would touch a little bit more on market structure, so I'll do that once I get into, or once I cover the analysis I have for the week. So the market dropped down, took out these lows here. This becomes an intermediate term low in my analysis. So I have sell side and buy side here labeled. If we're going to remain bullish, I do not want to see this low taken out, and I'll cover some recent examples with other intermediate term lows so you guys can see how I use market structure to predict intermediate term lows in price action. But first, let me cover what I'm looking for here. So this low I don't want to see taken out because, again, this low already took out sell stops here. So now this becomes an intermediate term low in my analysis. These lows here can be swept and then start to work higher. However, if we accelerate down through these lows and break this intermediate term low here, then I'm going to start looking at these inefficiencies here as a draw, and then how we trade there. We may even want to get down into sell side here if and when we break this low. As of right now, again, I'm not calling a top. I'm staying with the bullish narrative. So as of right now, this is an intermediate term low in my analysis. These equal highs here, I think they left that a little too clean. So I do think they're going to use that. I do not think this is a topping formation. So I don't think the market's topping out here, but it is reasonable for it to take out that sell side. And especially with the news that came out towards the end of Friday with the downgrade of the government debt for the United States, those are all factors that may play into this. However, again, barring any crazy gap opening, because again, we don't know where they're going to open it on Sunday. If there's a crazy gap opening, then I'll have to reassess if and when we get there. So do keep in mind that what I'm saying here is just my initial thoughts. None of this is set in stone. The market has to do this, right? Again, we'll watch the gap opening on Sunday, and then we'll be able to use that information going into the week. So going back to what I said, I was going to cover a little bit of market structure here. So we've been clearly bullish on indices. So now looking at the hourly chart here, how can we start to use this insight to frame market structure? So if we look at intermediate term lows, and first I'm going to label them, and then you guys tell me what makes it an intermediate term low. So let me scrunch this up here. Perfect. So the bias is bullish, and I was speaking with the gentleman that I'm working with one-on-one yesterday. I took the time to explain this to him, and I thought it would be a helpful one for all of you guys. So I want to go ahead and touch on how we look at the market in the lower time frame in the context of the higher time frame. Lower time frame price action and the narrative in the lower time frame is all going to be derived from the higher time frame. Now, what does that even mean? Well, looking at this here, this drop here. If you're just zoomed into the hourly chart and you didn't know what I just covered on the monthly, the weekly, in the daily, what might you see here? You may see this as, oh, we had a raid on buy side. We had a displacement and a shift in market structure. So, oh, wow, there's that ICT 2022 model. It's time to go short now. And again, that's pattern trading. Reason being is because, again, that lower time frame narrative is derived from the higher time frame. So is this going to be a shift in market structure? Or is this going to be a stop hunt, raid on liquidity, to price in a low and continue higher? It's going to be a stop raid to accumulate sell stops and continue higher. How can I confidently say that here, 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 whoops, and now potentially here? Because if the market's going to remain bullish, market structure needs to hold in this way. And if you go back and backtest, you study this, you'll start to see how you can trust your bias in these long-term price swings and not see every single drop as, okay, the top's in, the market's going lower. So again, you want to look at your lower time frame price action in the context of what's the monthly, weekly, and daily reaching for. And it's going to remove a lot of the confusion that many traders have if you're just zoomed into these lower time frames. So again, looking at this drop here, this was just a drop in the sell side to price in an intermediate term low, and then we get explosive price run higher. Market drops down, relatively equal lows. That's just accumulating sell side for another explosive price run higher. Intermediate term low here, just taking out equal lows for the next explosive price run higher. So what you're going to start identifying is explosive price runs occur after a run on opposing liquidity. So this is actually a great buying opportunity if you understand what you're looking for top down in the markets. Then you can see the same thing remains true for every little rate on liquidity that we get. So this makes our trading much easier because now when we show up at 9:30 for the AM session, whatever time you may be trading, for me it's generally 9:30 to 11. Now when we show up at that time, we know what we're looking for, right? Why would we look for a Judas swing lower at 9:30 and then for expansion higher throughout the rest of the day? It's because the higher time frame bias is bullish, right? The daily candle, we're expecting each day to close higher than we open. So if it's going to close higher than we open, that means what? The bias is bullish. So every drop, we want to fade that. Fade the drop and then trade the rally off that drop because it's going to create an intermediate term swing point that you can then ride higher into your targets. So a little bit there on market structure and how that kind of blends into higher time frame analysis bias and how you can use narrative on the lower time frame and not really get lost up there. I struggled a lot with that early on because there's a lot of things you have to be able to understand and relate to each other. And if you're just zoomed into the lower time frame, it's really easy to lose that perspective. What's going on here with the camera? Camera's turned on and off. We good? All right, beautiful. All right, guys, so that's everything I wanted to share here today. Let me see if there's any other markets I want to touch on here. Bitcoin's been bullish. Daily chart, we've been watching this fair value gap here. We're covering zones remain above that. Bitcoin's going higher into new all-time highs. Same thing for Ethereum here. And yeah, so that's about it. That's all the markets I'm looking at here today. Any questions from you guys? Cleo, it's crazy what a little bit of risk management can do. Wish I learned it sooner, but you really opened my eyes. Thank you. Love to hear that. It is the game changer because before we can be profitable traders, before we can get to consistency, we first have to learn to be good risk managers, right? So there's 3 steps that every trader or phases that every trader has to go through to become profitable. And the first phase is you're just losing money consistently because you have no idea what you're doing. I spent a lot of time there. After you go through that first phase of losing money consistently, you then graduate to break even, right? And break even is that second phase of trading. Nobody jumps from unprofitable to wildly profitable right away. Just about every trader has to go through that break even phase because it's an important part of your development, right? So that break even phase is where you learn how to manage risk, right? Because before we can make big money, we have to learn how to keep money. And unless we can be break even and prove that we're responsible, we can manage risk and we can keep what we have, then we can then progress onto the third stage, which is now we're consistently making money. But consistent money making doesn't happen if you don't know how to stop your own bleeding. So you have to know how to stop your bleeding. You have to learn how to be a break-even trader first, get comfortable there. Then over time, you can progress to consistently profitable. But they're all stages of the progression. And unfortunately, most traders try to rush through that break-even phase and just try to hurry up the profitability. And unfortunately, it just adds months or weeks, months, and years, unfortunately, onto your profitability the quicker you try to rush the process. So there's one thing you take away from that, from this entire discussion. I hope it's that. Don't rush the process. Understand the necessary phases that you have to go through. Because again, it's not just consistently losing to consistently banking, right? There is a process in between that you have to work through to be able to get to the other side of consistent money making. Hi, Dylan. Is your outlook for gold silver and oil. Yeah, let's take a look at that. Let's look at crude oil here. So for crude oil, watching how we trade inside these up close candles here, that's going to be important for my long-term analysis on crude oil. I absolutely think crude oil is going to fly at some point in the future. That's probably going to be on the other side of China invading Taiwan. So once we see that, we will absolutely see crude oil fly to the moon. But as of right now, everything is looking bearish. We have already taken out several lows here, though, so I'm not saying it's a high probability shorting opportunity. Just watch how we trade inside that up close candle on the weekly, and then now we're finding this to the daily time frame here. We have a balanced price range here with this SIBI and this BISI. So watch this range here and study how we trade there. If we remain above it, then my attention is on these relatively equal highs here for buy side. If we sink down through it, then I would expect it to use this gap as a reclaimed gap here and then sell off into the equal lows. So those are the two scenarios I'm watching. This is not my favorite market structure to work with. So just so you know right away, whenever there's equal highs and equal lows, and there's no easy higher time frame like monthly, weekly draw, it makes it a little more difficult to give you one side of the market and say, all right, we're going to buy side or we're going to sell side, like I'm able to do in cleaner markets where it's more obvious. So right now, this is not easy market structure to read, right? So just compare this, for example, to bonds, right? Where it's just really easy market structure to see what it's doing, why it should do it, right? And then where it's likely going to want to reach for here. I don't have that when market structure is building in like that. So what I'm then forced to do is watch key levels that are in close proximity to market price in the range. Then from there, we can see how the market trades at these key levels, and then that'll give us a great deal of insight as to what it's more likely to do inside of more difficult market structure. All right, and then the other one was silver and gold. Yeah, let's take a look at gold here. All right, so gold, we dropped down into a nice discount here. Watch how we trade inside this bullish breaker here. That's what I was watching. So we ended up getting the drop into a discount here. What discount? Discount low, too high. Discount market traded to. Watch this bullish breaker here, and that's going to make or break gold. If we remain above it, that's bullish. Continue blasting to all-time highs. If we lose that level, then sell side here becomes in play, and then we could work a lot lower in the short term for gold. And then the other one was silver. Let me take a look at silver. I haven't looked at silver in a little while. Yeah, I have no opinion on this market here. No opinion on this right now. Watch how we trade inside this up close candle. So same thing I gave a couple weeks ago. I remember looking at this up close candle here. Watch that and that weekly fair value gap here. As long as we remain below that, then that is not bullish. But when it's this type of price action, and again, market structure like this, it's significantly more difficult for me to give an easy one-sided analysis until we displace out of the range. So if you are looking to trade this market, we're in a range, let it displace. Let smart money reveal itself, show its hand by way of a displacement. Olawale, my man, good to hear from you. Dylan, why are you not using the back adjustment on the NQ weekly time frame? When it is off, there is a discrepancy between the front month and the continuous. Shouldn't they be aligned? Yeah, that's a great question, Olawale. So when looking at the continuous contract here, I have back adjustment toggled off because I want to see the true price of the previous contract months, right? So we'll notice there's a roll gap. When's the last time we rolled over? Yeah, back here in December. So when back adjustment is toggled off, now the prices on these levels are slightly different. So personally, I just keep it toggled off, and I use that information in that way. But let me see. Yeah, let me pull that up real quick. Let me see. Yeah, so there's not too much of a discrepancy there from what I'm seeing. Like the levels would still be the same whether back adjustment is off, like that weekly fair value gap still remains true. Well, actually does it? Let me see. Yeah, so that actually does change it. Yeah, so I'm going to go ahead and use it with the back adjustment off. Yeah, so just to keep it simple, back adjustment off because it shows the true prices from the previous contract months, and from my experience, that is useful information in that way. But exactly as you said, right, if you just go to the continuous current contract, then it will remove a lot of the confusion. Eslam, can you explain what does backtesting mean? that ICT mentioned in his videos and how to do it? Yeah, that's a great question, Aslan. So backtesting, for me to actually give you a full tutorial on it, would take a little bit of time, but I'll go into a little bit of the importance of it and why it should be done, and then I'll give you just a quick example here. So just like any other high-paying skill set, doctor, lawyer, engineer, pilot, how do they learn? They first learn by looking at case studies, right? Cases that have already happened, patients that have already been treated, right? Pilots study people that have already flown. That is backtesting, right? That's looking at things on the left side of the chart, learning what am I looking for, and learning how to trust it, right? Because it's not easy buying a market that's dropping into a fair value gap. It's not easy selling a market that's ripping into a liquidity pool. But the way you get desensitized to it is by seeing it, right? Same thing like a pilot, right? I'm sure he's shitting bricks, you know, hundreds of feet in the air, not having practiced before. So how does he get desensitized, calm, cool, collected to flying a plane, to doing surgery on people? It's because they've done the necessary work to get confident with what they're doing. And if you apply that to trading, I'm nailing a lot of you guys, right? You're probably stressed out, you're white knuckling it, and it feels like a roller coaster experience every time you're trading. And that's many factors, but number one, you don't have confidence in what you're doing. The other one is you're over leveraging, but that's a whole nother conversation. If you don't do the necessary work to trust these concepts and spend time studying them on the left side of the chart, it's going to be really difficult to trust it on the right edge of the chart. And again, that's why a lot of people's trading looks like a train wreck, because you haven't done the necessary work to have the confidence to trust what you're looking for and why, because you haven't seen it hundreds of times. So backtesting cannot be underscored enough. And if you look at any other high-paying profession, like trading is, it is the same procedure. You have to study what's already happened. Then there's the progression from that, right? Once you get good at studying what's already happened, then you practice, right? Pilots fly simulation. Doctors cut on cadavers. Traders use demo accounts, right? And that's how you get good. And then from there, you make that transition. Unfortunately, everyone just wants to skip over to the last step of making money. And unfortunately, that's why we end up in the situation most of us do with trading. But there is absolutely a right way to do it. And I do everything in my power to make sure that you guys understand that, because I don't want you to go through the way I had to do it, losing money, stressing myself out, and just making it unnecessarily difficult because I was hard-headed. And once I really pulled my head out of my ass, got my head on straight, realized what I needed to do, it made all the difference in my trading. And that's what I want for all you guys. Now, as far as how to do it, you just go into your charts. You make annotations, observations, right? What did you see that day? What did the market do? What was your bias? Like, were you bullish or bearish? What did the market end up doing? And then over time, you're going to reflect and be able to identify characteristics. And then doing that for 3 to 6 months to then 1 year, you're going to be unrecognizable. Your ability to read price action shoots through the roof, your level of confidence, and then you really give yourself a real chance at being a profitable trader instead of just a dream with no real work ethic behind it, like unfortunately most people have. Great question. That's not how to do it. No, that's not available in Discord, is it? There's a template that I give to those I'm coaching that I use for my Notion journaling, but I do give it for free actually in the action plan consultation calls that I do. And I make that available for free because anyone that even just gets on the free action plan consultation and I give them a game plan, I actually want them to have a real way to implement that game plan. So I actually have a Notion template that I use for my backtesting, and it's not ever complicated. I look at the daily, the week. I don't look at the weekly every day. I look at the daily, the hourly, the 15, the 5, and the 1 minute. And it's anywhere from about a 45-minute to hour-long process. Now it's around 30 to 45 minutes for me because I'm a busier man now than I was when I was first learning how to trade. But it should be a process you do every single day. The key with it, though, is it can't be too long, right? You can't be there 4 hours backtesting every single day. You're not going to do it consistently. You need to get a system that's anywhere from 45 minutes to an hour. Do it every single day. Spend 5 to 8 minutes on each time frame, noting your observations, what you're learning, and over time, let that experience build and grow on itself. Great question. Nikki, does tweet just mean for random price action, or does it go to desired targets as economics/folder news? Yeah, great question, Nikki. So it really depends. It really depends, because if a tweet comes out or some news comes out that would upset the current narrative, then that's nothing we can control, right? So we understand that these volatility injections in the market, as you mentioned, red folder news or earnings reports, those things just inject the volatility to take the market where we were already looking for it to go. However, let's say there's a volatility injection that's counter to that, right? Let's say China starts dropping bombs in Taiwan, or people start getting rowdy in the Middle East, right? that may be a whole different black swan that's opposed to the narrative that's in price action. And it can just sink thousands of points and go against what we were even looking for to begin with. So it really depends on the type of news, but for the most part, if it's standard scheduled news that we look for, or standard scheduled volatility injections that we look for, you can trust that it's going to deliver where the market was already going to go anyway. The only exception to that is black swan events, which that's why they're called black swan events, because we can't predict them. Yeah, great question, Nikki. Mr. Nuller, can you look at gold? The recent sell-off was just dipping into a discount fair value gap. Already covered gold for you, Mr. Nuller. That should touch your question, my man. Watch that breaker. If NASDAQ goes up and gold goes up, what's dollar's correlation with gold? We've actually seen a disconnect in market symmetry like we usually see it, right? Normally we're looking for example, if we look at like dollar, for example, if we look for lower indices, we prefer to see higher dollar. But actually this year, it's not been the case, right? We've been seeing lower NASDAQ and lower dollar as well. So intermarket analysis, looking for market symmetry is something that's good to look for, especially in cleaner, more standard trading times, I guess, for the lack of a better word. But right now, there's just a lot of craziness going on. A lot of people are losing trust in the US dollar. A lot of people are using trust in the US financial system. And that's being reflected in the dollar and uncertainty. And that's why we've seen a disconnect from what we usually see. Like if you backtest and you look in years back, for the most part, it's dollar higher, indices lower. And there's that correlation that we can use to our advantage as analysts. That's why we look at these different assets, even though I don't trade the dollar. However, as of recent, we have seen a huge disconnect in that market symmetry that we generally look for. So what I've done to cut through the noise is I'm just looking at NASDAQ. I will look at dollar. I still use it in my analysis, but it weighs a whole lot less. And I'm just seeing what's the price action in NASDAQ telling me, or S&P. And that's what I'm working with for that respective section. Hey, Olawale. Yeah, absolutely, brother. Glad to help. It's good to see you, my man. Hope you're still crushing it, brother. Nikki, did that cover your question? Any follow-ups? If you have any follow-ups, you can send it here or as always in the Discord. Sextile, hopefully that makes sense. Hey, Dylan, how do I know when Trump will speak? Is it YouTube or a certain website similar to Forex Factory? Yeah, so that's interesting. Actually, from what I've seen, he's been scheduling even spontaneous calls because I always look at the economic calendar every Sunday going into the new week. But I even check it each day because they'll actually sprinkle in Trump's speech or even the Fed chair at times when it wasn't scheduled at the beginning of the week. So my recommendation for you there is just making sure that before you open up your charts, you're looking at that economic calendar first before the trading sessions. Make sure no surprises are there, and that's what I've been doing. Or I've been kindly reminded by those that are in the community with me when we're live trading, hey, you know, Trump was scheduled in. Oh, really? Let me check that. And if I happen to miss it, but it is good practice to look at the economic calendar every single day before you trade. Strat King, hey Dylan, ICT holds back on market structure. Market structure shifts versus a chooch. What would you say is the difference? I have no idea. I'm not sure what that is. There is a difference between a market structure shift and a market structure break, but that's more relevant to the context of the market, right? So a market structure break is a more significant break in structure that then leads to long-term price swings. Whereas a market structure shift can just be a short-term change in sentiment intraday, and that's kind of how I sort that in my mind. But I'm not sure what that other thing is you're talking about. I've never heard of that. Hopefully that makes sense though, Strat. But as far as like knowing the difference between a shift in market structure and a stop rate, that's all going to be dependent on higher time frame analysis, right? So hopefully I was able to cover that clearly with what we were looking at with NASDAQ, for example, right? Whereas why were we looking for all these drops here? Why are these not shift in market structure, shift in market structure, shift in market structure? Because the higher time frame narrative is bullish. You see what I'm saying? So it's more so about understanding where's the higher time frame draw. That's always going to be number one. Like unless we know where the draw liquidity is, where that market's likely to trade through, none of these other concepts are going to be that effective because it's just going to be another pattern. So the way you get away from pattern trading and understand narrative is where's the higher time frame going, and then how are they going to deliver it within the context of that higher time frame draw liquidity. And that helps remove a lot of confusion for those I'm coaching and working with because it gives you simple procedures. And if you know how to read the markets and the market's bullish, every drop below sell stops is going to be new smart money accumulation, smart money accumulation, smart money accumulation, smart money accumulation for the next leg higher in price action. change your character. Okay, yeah, I haven't heard of that, my man. Yeah, I don't have much to add to that. But hopefully what I shared was clear enough as to how I personally look at those factors. Can you touch on coin? Thanks. Enjoy the rest of your Sunday. Absolutely, Joe. Let's look at Coinbase. So again, one of the big things with stocks before we even get into stocks is knowing what the index futures are likely going to do gives you an immense advantage. Stock traders that don't look at the equity, the stock index futures, or don't know how to read it, puts you at a huge disadvantage. Because what you need to understand with stocks in particular is that all boats rise in high tide and drop in low tide, right? Some are still going to go against the trend. However, for the most part, it's going to make your trading a lot easier. So we've been bullish NASDAQ. So even going to any of the majors, right, like Apple, Microsoft, Amazon, they're all bullish bias because all boats rise in high tide and drop in low tide. So now going to Coinbase, with that in mind, we can see how we have a bullish bias. Now let's go up to the higher time frame, see what we're looking at here on good old Coinbase. Let's see what we got here. So the recent strength in Bitcoin is also bullish for the Coinbase itself because the assets they hold. So we saw a drop here on sell side. Again, explosive move happens after, runs on opposing liquidity. So we're seeing a nice explosive price turn higher from this low here. So my attention goes to these highs here. Like this should jump out off the chart to us. So we had a run on sell stops. And why is that important, right? Let me go back to equities real quick and touch on why that's so influential, right? Why are we looking for NASDAQ to get up into these highs here? Because they've already accumulated the sell stops down here. So if smart money's long from these sell stops, they need to sell to close out of their buy, their long position. So if they need to sell it, they need to sell it to willing buyers at an expensive price. Market efficiency paradigm. Sell stops to buy stops. So that now gives us a great deal of narrative. So now we go into something like Coinbase here. Why would we look for this to be a drop into a rally? Because stock equities are bullish. Bitcoin is bullish. So this drop here is just a run on sell stops for them to accumulate at a discounted price to then work higher and then distribute above these highs here. So we have buy side above market price. That's going to be the draw as long as you remain bullish on stock indices and of course cryptocurrency as well. Weekly chart. Let's see what we got here. Nice strong close on Coinbase. I like that. So look at this weekly gap here. And we want to see this treated as an inversion gap going into the new week. Ideally, what we'll see, and where did that go? Ideally, what we'll see for Coinbase is the market stay in the upper half. So again, sell stops were already cleared out here. We got above this inversion fair value gap. We want to see it stay in the upper half. And then from here, start to work higher. That would be very bullish for Coinbase. And then daily chart, we start to get into the spotty price action. But you can still use it for targeting purposes. So these equal highs here are nice. And then this high back here, if we continue to accelerate. And then look at that weekly fair value gap that we extended through. And then look at how it works these levels. Trades to the high, reprices down to the low, blast off to new higher highs. So we want to see it work that upper half, and that would be bullish for Coinbase going forward. What changes that is if we get through that weekly fair value gap. If we trade all the way down through it, then I want to see this treated like a breakaway gap. I don't want to see this come back into it because we already retraced, left it, made a higher high. I don't want to see us come back into this range here for Coinbase. So that's the business for coin. Hope that was helpful, Joe. Thanks, bullish same. Absolutely, brother. Been working with me for about going on a year and a half now, so no doubt we're on the same page. Benson, since we have high impact news on Thursday, Monday, Tuesday, and Wednesday has no news, should we aim for low hanging fruit for Monday to Wednesday since we might have high resistance liquidity run because of no news? Benson, you're 3 steps ahead, my man. Absolutely. Because there's no high impact news, it can still be a tradable day. What you want to know how to do, the skill set that you want to acquire is knowing how to read high resistance versus low resistance. Because I can show up on a day with no news and just let the market tell me what it's going to be. Is it going to be high resistance or a low resistance day? And we can get that feedback based off how the market's delivering. So if you know how to read high resistance liquidity runs, which is 3 simple things that I look for, is the market giving a lot of overlap in price action? Is it lacking displacement? And is it spending a lot of time inside of fair value gaps? If I see those 3 things, it's usually going to be a no trade day for me. If I see low resistance liquidity runs, which is a lot of displacement, a lot of fair value gaps, and little time spent inside those imbalances, now that gives me a great deal of confidence that we're in a low resistance liquidity run. So that's how I take no news days. I show up and I let the market tell me what it's going to be. I don't impose my will. It's going to tell me whether it's low resistance, high resistance, and whether or not I want to take on risk in that particular session. Great question, Benson. And then when there's high impact news, the probabilities of it being high resistance drop off significantly. With the recent times, of course, that's been very different. There's been a lot of high resistance liquidity run, time distortion, all types of crazy stuff. However, for the most part, that general rule will serve you well going forward. Eslam, while doing it, is it better to execute with demo or just read without clicking the button? Phenomenal question, Eslam. So those are two distinct phases of development as well, right? So for a trader, for me to take a trader and make them profitable in 6 months, which I absolutely have done, and it is fucking awesome. For me to do that, a trader has to lay down everything they think they know and lock into the process. What that process looks like is tape reading, or first it's actually back testing. From back testing, it's then tape reading, where you're pushing no buttons. You're just watching the market paint. You're growing comfortable seeing it do specific things. Then once you go through that critical phase of back testing, tape reading, then you go into demo trading. Because if we jump into demo trading too early, the problem with that is we end up building bad habits. How many times have you guys opened the demo account, loaded up 100 mini contracts, and start spamming buy and sell all day long? That is not a productive use of your time. So the way you make demo effective is you backtest and you tape read. So now you know what you're looking for. You develop a model. You understand the strategy that you're looking for. And then you use the demo as like a lab experiment, because either you get it wrong or you get it right. And it's going to teach you from those experiences. If you did it right, that's great. It rewards you for doing the right things. If you get it wrong, it's an amazing learning opportunity, and you had to pay no money to learn that lesson. And then once you get consistent in demo, then it's reasonable to potentially entertain the idea of going into live accounts or prop firms, which I never tell anybody to do. You will know when it's right for you based off your level of confidence in demo trading. Excellent question, Aslam. And each of those phases should take like a couple months, right? So a couple months of tape reading, a couple months of demo trading. Well, actually a couple months of back testing, a couple months of tape reading, and then a couple months of demo. So let me repeat that again. I like the way that came out. Back testing, tape reading, demo trading. And then after 6 months, you can absolutely be profitable if you focus on the right things, right? Not wildly profitable, not millions of dollars, but you'll be able to see that, okay, wow, like I'm consistent. I can absolutely replace my income with this over time if I keep doing the right things. And that's all I can promise someone in 6 months, which is a very short amount of time considering how long a lot of us have been doing this. Nikki, that was good for me. Awesome. Thank you. Yeah, my absolute pleasure. Jay, thank you, bro. Yeah, my pleasure, brother. Appreciate you joining. Don't want to make sure I'm missing any. Jay, final question from me. Why do you still use the 9:30 a.m. opening price way after that time? Like, for example, around 11 a.m.? Because using the opening price gives me a bearing on premium and discount. Like, if I'm bullish, simply put, I want to see a drop in the sell side or a discount inefficiency that's below that 9:30 opening price. That's going to create a discount for smart money to load up the boat. And ideally, I'm going long below that 9:30 opening price, because that ensures I'm getting in a really good discount before we see that distribution higher into higher time frame targets that we'd be looking for based off the monthly, weekly, and the daily chart, as I've been covering here for you guys. So 9:30 is very important in understanding where kind of equilibrium is for the session, premium and discount. And if I'm trying to go long, I want to get long either below or close to that 9:30 opening price, because anything really high above that, I can still take, but I will likely do it with less risk and just scalp it, because for me personally, I want to get in that really deep discount and then ride that entire move higher. I don't want to chase it and react after the fact, kind of like a retail minded trader would. Great question, Jake. Mind looking at EU and GU? Yeah, I'll take a look at Euro. Haven't looked at these two in a while. So Euro pound's weaker. Euro is stronger. All right. All right, so if we see higher prices on dollar, then that's going to lend to lower prices on euro and pound. The reason I looked at the exotic here, the cross between euro and pound, is because now this tells me which one is going to be a better asset. So if I'm trading currency, do I want to go short pound, the one that's showing more strength, less willingness to drop, or euro, the one that's breaking down a lot more and showing a lot more weakness? Of course, we want to short the weaker asset. So euro, pound, same thing we covered on US dollar. Yeah, same thing we covered on US dollar. So dollar higher, foreign currency lower, and then use the same key levels that I used on dollar, transpose that on euro, and that should give you complete clarity, right? If you've been looking at that order block here, the propulsion candle, how it's worked out on dollar, and then just do the inverse of that. So an interesting way to do it. How do you do like inverse the chart? What do you do? Option I? Oh, there you go. So let me go to US dollar. So if you want to see my analysis for euro, what is it? Option I? Option I. There you go. So here's my analysis for euro. Watch this gap here, propulsion candle, and you can see how it's just a spitting image of what we're seeing in, in euro. So that's the business there. Hopefully that makes sense. Loyalty. Coin just got added to the S&P 2 this Friday. Oh, awesome. So focal, that's a really good factor as well, right? So for example, me personally, I don't worry too much about fundamentals because in my opinion, it's really confusing and I'm not smart enough to figure all that stuff out. What I am smart enough to know is where's the draw on liquidity, where's it likely to trade to based off market structure and order flow. But when you have bullish narratives supporting what we look for in price action, it's even better, right? So the fact that order flow, everything's already bullish on Coinbase based off what we're looking at, and then you have a reason to justify why it's going to go higher with some type of catalyst, then it's just even better. So that's a great deal of benefit to have that information as a stock trader. Great point, Focal. Shari, hi, I trade NASDAQ futures. What is your analysis for NASDAQ for tonight? Already shared that. The recording will be available, so you can go back and look at my analysis for NASDAQ at your convenience. Aslan, thanks a lot, Dylan. My absolute pleasure. All right, guys. Had a great time here with you guys today. Hopefully this one was insightful. I will see you guys next Sunday. And like I said, I will be looking to get to work here on YouTube content to be sharing more with you guys, help you guys out in your trading journey as best as I can. Very much so looking forward to doing that. Take care. Have a great rest of your weekend and stay safe, everyone.